So in this video, I'm going to be talking about the difference between trading tools and trading indicators. You see, there are so many traders out there that always claiming they are not trading indicator traders, why some are actually using indicators and they don't know that what they are using in this indicator. First, before I go into explaining the difference between the two, I would first like to say this out loud that either trading tools or trading indicator, both are meant to make your life easier. And also, all trading indicator are tools, but not all trading tools are indicators. I'm going to say that again. Either indicator or tools are meant to make your life easier, but not all indicators. All indicators are tools, but not all tools are indicator. Now, let me explain that for you. You see, I believe no matter the kind of trader you are, you use trend line. No matter the kind of either SMC, ICT, or trend line trader, or whatever retail trader, all of us are retail trader actually. So, or retail trader, or whatever, you will use this line you are looking at over here. You use it. You either use it to get whatever shape, change of character, or use it to get whatever other things that you want to get, or you apply it the same way that the normal trend line trader use it. You are still participating in the using of a trend line. The same way people use this trend line, people can use it to also figure out just this exact movement that this EMA over here, moving average over here, is making. Like if I plot it right here, it's still making it, it's still almost the same thing. In fact, the moving average almost lost on the chart because aside from the swinging move that is doing. So that aside, that is for trader, that is for indicator. Then now look at this over here, this tiny line you are seeing over here with a small M at the top of it. I'm going to also do like this, plot a line on it, and it cover it. What the line is meant for is to help me out in knowing where the month started from. And once we get into a new month, another line is going to plot also, and it will be like that. But I can equally calculate what day of the month are we, and then using that to also know where does the month started from and where is it likely to end at. I can use that. I can do it manually myself without using these tools that you are looking over here. But what does this do for me? It makes my life easier. I don't need to be doing the counting myself before I can find where the month started from, where the first candle of the month is on the screen. So that is the work of tools to make your life easier. Then, the moving average analogy I did just now, that we can plot a trend line under the candle ourselves instead of using the moving average. It's also the same. Instead of us drawing the line, we can use the moving average to get the market movement direction. And people use trend line because they believe there's no need for them to use it. Why some don't even have time to plot the trend line, they just apply moving average, and then they go with when the market break above it, they enter a trade. When it break below it, which happen over here, they find a trade also from there. And some also have a choice. Some choose to also apply both the EMA and then plot the trend line at the same time. Then when they see the market break above the trend line, they will still wait for a market to cross the moving average upward and probably retest it before they find a trade. So all indicator are tools, are trading tools, but not all tools are indicator. So this now, how are we going to differentiate between this moving average and this monthly close, monthly open line that we have here? With this monthly open line, I can add it. It might be like some more of the confluence which I use. I apply with some other trading style and then generate a trading style out of it. But they just took the light and I have to like on the gen now. Okay, where are we? So trading indicator are trading strategy converted into a tool. Trading indicator are trading strategy. More like automating something, automating something instead of going through the stress of, the applying it one by one another. So they combine everything into one single tool to simplify the strategy itself. And that is what trading indicator do. So for instance, this EMA that I used the other time, like when the market break above it, it retests back into it and then continue. Remember, using trend line is also someone's strategy. This is some people's strategy. When the market break the trend line, it retests back into it and then continue moving up. So instead of those people drawing, the idea of EMA actually comes from that also. So instead of plotting the trend line, so that is where the EMA indicator comes in. So they can actually convert this to, I think, 20 if I'm not mistaken, or even more than that, and then it will get more closer even further. Let me see 25, what 25 is going to do for us. Let's see what 25 is going to do. You can see 25 gets more closer, so we can keep increasing the figure and then getting closer until we get satisfied. So okay, look at that now. So look at this. You can see even the 30 now seems a little bit like more like where the trend line itself will actually be sitting on. So the trend, look over here too. So trading indicator are just they are just a strategy converted into a tool. So to simplify the usage for the owner, why trading tools are meant to make your life easy. Actually, trading indicator are also meant to make the users the life of their users easy also. But trading tools are not meant, they are not actually a strategy on their own unless you build a strategy with it. So like I said the other time, all trading indicators are tools, but not all tools are trading indicators. So I keep repeating that so that you can get what I'm actually talking about. So I'm going to also do something now that is going to probably help out in understanding better. These tools also, it have some data over here while it also plots a line on my screen. If I share this with anybody, or I share my screen with anybody like this, and they're like, oh, they'll be like, oh, that guy is probably trading with an indicator, but this is not an indicator, this is a tool. And what does this do? It help me plot economic calendar events on my screen, on my chart. So instead of me going to forex factory to go and be looking for where is FOMC, where is FOMC meeting, where is FOMC event, where is CPI event, when is it happening and all that. So it plots it out on my screen for me to see right in front of me while I'm also analyzing my chart. So if I go on, like, let's say 4-hour time frame, on 4-hour time frame, you can see this is the FOMC minute meeting that happened on what day is this? I think that was Wednesday or so. Wednesday, yeah. This is the event that happened. Then this is FOMC meeting that happened on the 18th of September. And the next one also is this one over here. And then we have so many other ones that will still come also in front over there. So this is a tool, not an indicator. So why we can classify EMA as an indicator? So that is just how it is. That's the difference between the two. Tools are not necessarily indicator, but all indicator are tools. So just try and as much as you can to understand that part very well. So that's basically what I want to share in this video, and thank you for watching. See you guys next time.